I didn't think it would end this way.
End? No, the journey doesn't end here. Death is just another path. One that we all must take. The grey rain curtain of this world rolls back and all turns to silver glass. And then you see it.
What? Gandalf. See what?
White shores. And beyond. A far green country. And a swift sunrise.
Well, that isn't so bad.
No. No, it isn't.
That beginning intro clip there was me explaining to Lee not to worry about the incoming global coordinated economic collapse because there's greener pastures ahead, my friends. Guys, welcome to Market Makers, your homes for tomorrow's TA today. Often imitated, never replicated. Welcome to the nation of stagflation. Powell greenlit risk assets. He cut to the inflation battle. That could be for a couple different reasons. A lot of people believe because it's an election year, he's bowing down. He's going to let inflation run hot. Remember, we had 2 hot CPIs and a hot PPI in a row, and he offered zero pushback. On top of that, he even changed the metrics for when the Fed will intervene with rate cuts. Before, the Fed was forecasting 4.1% for unemployment. We're at 3.9%. That's been lowered to 4%. Not only that, he talked about reducing the quantitative tightening they've been doing, which means they won't be selling as many securities into the marketplace, which means more liquidity. Now, is he doing that because it's an election cycle, or is he doing that because he knows? He knows, and he has to lie to you, that a recession is all but certain, and it's going to wreck things. And now what's happening is the risk assets are taking off. It makes me laugh. I saw a couple of YouTubers, people sent me some clips. YouTubers saying things like, well, he really wasn't that dovish. Okay, again, it doesn't matter what I think. It doesn't matter what you think. Look at the market's reaction and tell me he was not dovish. He was completely dovish. I mean, I thought that just watching it. Offered zero pushback. He basically dismissed the hot inflation data, which is totally crazy because for years now, the Fed was fighting inflation and willing to do whatever it took to get inflation down to their imaginary bullshit target Ben Bernanke made up in 2012 of 2%. Powell brought Paul Volcker's book, the previous press conferences, saying we would do whatever it takes. And now we get 3 hot prints in a row. And he's like, could just be seasonal, right? It could just be seasonal. In other words, transitory. You have to understand, Powell believes, just like most of academia, most of professional economists, they're all Keynesian economists. They believe inflation, the primary driver is supply side, things like supply chains, things like the green energy conversion. And guys, not only that, I mean, I found this perfect video clip this morning from CNBC, which I can't stand that channel. It's so far left. But Mohammed Al-Arian went on there. He took time from his busy schedule of hunting wabbits, and he went on there to explain what he saw with Powell. And guys, this clip's a few minutes long. I want to play it in its entirety. It's a really good clip, and they push back on Al-Arian a little bit. I'm going to give it some color on the other side. Lee, go ahead and roll the clip.
Mohammed Al-Arian is here, Chief Economic Advisor at Allianz, President of Queen's College at Cambridge University, and a Fed, are you a whisperer? What are you?
Observer.
Fed observer. Did you think it was dovish, more dovish than you were expecting yesterday?
Oh, absolutely. And in 2 ways. One is a signal that they're willing to tolerate higher inflation for longer. And second, something that is flying below the radar screen is what Chair Powell said about QT, said about the balance sheet, saying that he's willing to slow down the journey to a lower balance sheet. I think that twin patience means that we may well look back on this week as the week in which central banks stepped away from a very strict inflation target to a much broader concept of an inflation target.
And this has, in your view, nothing to do with the election.
So I would like to believe the Fed in saying that it is apolitical.
You would like to believe? Do you believe?
Look, I have no other reason to believe otherwise.
Well, it was weirdly dovish, and I keep bringing up that suddenly it seems like the asymmetric risk is now of a recession after we've had two really hot inflation numbers.
So I was with you when you asked me what does the outlook look like. I told you 55% soft landing, 30% recession, 15% something better than that.
Oh yeah, I remember.
And I think that they realized two things. I think they realized that the economy is weakening, but they've also realized, or I hope they're going to realize, that we are living in a world in which the supply side is the problem, and that we need to tolerate slightly higher inflation if we don't want to sacrifice the economy. And I think that's the right thing.
Supply side is the problem because why? Is it because governments are still spending so much? The United States government is still spending so much money? I mean, it's weird to have fiscal doing one thing, monetary doing the other thing.
Correct. And we should be doing more to enhance the supply side. It is the problem, first, because of geopolitics. We are redesigning supply chains. Second, companies are emphasizing resilience as much as efficiency. So they are embarking on a more costly supply chain for good reasons. Third, the labor market is not as flexible as we'd like it to be. And then we're looking at a very uncertain energy transition. You put all that together and supply will not be flexible enough, and the Fed will have a choice. Either it accepts slightly higher inflation or it unnecessarily tips the economy into recession.
What's to say that the inflation remains slightly higher and doesn't get out of control?
That's the bet. That's absolutely the risk.
So yes, El Arian, let's go over a couple of things. El Arian believes he was extremely dovish as well. He also believes, he didn't say this, but it's coordinated, right? The Swiss bank, other central banks are being more dovish. The Bank of Japan, everybody's coming off more dovish. They're all willing to accept higher inflation. What does that do, by the way? Who does that help? Lee, throw up the Wall Street bonuses. This is the average Wall Street bonus, $176,000. That's the average. Some of these guys make millions, but this is the average. Well higher than the average family earns in this country. This entitles the rich, the elite, the top 10% that own 93% of equities. They get to enjoy the massive bubble ride up, creating even greater wealth disparity. So El Arian also listed the primary drivers in his view of inflation, right? Did you notice they're all things like we just talked about, right? Green energy conversion, supply chain, geopolitical events. This was the Fed's thesis as well. Remember, this was the Fed's thesis, which is why they originally came out in 2021 with, oh, this is transitory. This is why they kept buying mortgage-backed securities as we had 9% inflation, which, as you know, adjusted to the 1970 CPI was 20% inflation. But they kept enhancing this. They kept making it worse, throwing coals on the fire, really throwing gasoline on the fire. But El Arian believes this as well. Academia doesn't understand economics. They are not Austrian economists. There's very few of those left. Read von Mises, read Hayek, listen to Milton Friedman, listen to Thomas Sowell. There's people that truly understand economics. Most of the people in the administration, not just this administration, but other administrations as well, although it's heavily concentrated in Democrat administrations, are Keynesian. Keynesian economists, it's also where the modern monetary theorists came from, was that same school. Keynes was Roosevelt's chief economist or economic advisor, whatever, during the Great Depression. And he famously said when he was asked about all the money printing, all the spending the government was doing, how are we going to pay this back? Remember, it's the Great Depression. And Keynes said, I'm paraphrasing, he said, who cares? Seeing it right now, right? Joe said the same thing. $7 trillion is what we're spending. We're running a 7% budget deficit right now. Again, causing inflation. We're running a 7% budget deficit, which is unheard of in United States history. Unheard of outside of recovery from a recession. As a matter of fact, February, we just set a national record. We ran the largest deficit in U.S. history in a single month of $300 billion. $300 billion. In other words, every 90 or 100 days, we're adding $1 trillion in debt. But Mohammed El-Arian doesn't think that causes inflation. He thinks it's the expensive inflationary energy transfer we have to do to green energy. Guys, the Fed can't win the battle of inflation because they don't understand what causes inflation. Printing money causes inflation. Spending that fake printed money causes inflation. Inflation literally means to inflate the money supply. You will never hear that from a politician, especially this weekend at Bernie's administration that we have, because this is the whole goal. Keep the economy propped up as long as possible, get through the election cycle, and then see what happens. But this will end the way it always ends, with a collapse and a serious recession. The fact that El-Arian still thinks you have a 55% chance of a soft landing, I mean, it's unbelievable. This guy teaches students, right? How do you have a 55% chance of a soft landing when you have this massive yield curve inversion, when we have historical data to look back at, when we have the leading economic indicators in recessionary territory about to surpass the GFC record, and we have a global coordinated event of the world accepting higher inflation? This will hollow out the consumers in every single country, which is why we have record credit card debt right now as a country. Now, Janet Yellen was asked about that when she went on Fox Business News, the record consumer credit card debt. And she says, this is a normalization of spending and of consumers. It's normal to have all-time highs in credit card debt, guys. It is not. So what we're going to do is we're going to look at where these targets can get to on the charts, because we are going to have this massive run up, which is hilarious because Powell didn't want to have a bubble, and he didn't want to be Arthur Burns with stagflation, which is exactly what he's doing. But he's inflated this bubble even more. We're having this massive run up, and it makes the disaster that much more disastrous when it actually pops, because it's a lot more to give back to the downside when the Ponzi scheme is up.
Looks like meat's back on the menu, boys.
And that's right, guys. We're going to be trading this to the best of our abilities all the way up and all the way down. So we want to look at the targets and see where we could be getting to here on the charts. Lee, without further ado, let's go ahead and start the show. All right, boys and girls, as always, this transmission is brought to you by our two fantastic sponsors, BingX, where you can trade all the cryptos, equities, and commodities with only a VPN recommended for your security on the internets, and SimpleFX, guys. Check those two links out. I'll pin them in the YouTube comments and the video description. It helps support this channel if you enjoy this transmission. These videos are not monetized for obvious reasons, because we are also shadow banned, and this video definitely won't be monetized because of the clips that we're playing in it. So if you like the content, guys, like, subscribe. It's the only way to get the content. Consider joining our Discord with 12,000 other freedom-seeking individuals. Fantastic place. Both those exchanges will pay for your first month. Message Lee in the Telegram for all the details. So let's go ahead and look at the S&P. Look at the waves. This is our fractal wave pattern. 20% up moves, 9 to 10% down moves is the average. So 20% up, 10% down. Let me get my marker. 20% up, 10% down, 20% up, 10% down. And now we are at, I mean, this thing's going to be what, 30% now? This is a massive move, 29%, okay? 29, look at this, just up, 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 up. This is going to set records, guys. This, I do believe when this thing is done, this will be the biggest bubble in equity market history, surpassing 1929 because of the ferocity and the growth rate of the bubble, guys. It's absolutely mind-blowing when you study these things. Let's go ahead and look forward here on a daily chart. But what a lot of people want to know is, where is this most likely going to? Now, I'm going to do a update on the solar cycles video. I know in my last video, the audio popped a little bit when we start talking about the chart. But guys, April 8th is a key pivot point that I'm looking for. If you watch this channel, you know what I'm talking about. And I want to look at some Fibonacci projections. Remember, this is proportional moves in the marketplace. We just got past the 1618 at 5286. Next key resistance for me is 5368. We're at 5318 right now. I want to see if we can get up there. Remember, looking at our divergences, everything is bearish divergence. Momentum starting to flatline some. Maybe that could come up. But since your December rally, your peak rally, peak momentum, peak participation was in December, everything since then has been downhill. Okay. But again, FOMO can cause the markets to go up. Fewer people can pay higher prices with all the excitement, and you just have to be patient and see how this thing shakes out. Same with the MFI, obviously still divergent as well here on the daily time frame. Watch 5368 here on the E-mini. That's my next key level of resistance. We'll see what happens when we get there. If we look at this here on the, let's look at a smaller time frame. Let's go to the 5-hour chart, see if there's anything developing here that we can see. We'll leave the fibs here in place. Nothing yet, guys. I mean, we're at 53.19 at the time of this recording. We'll see what we can do here if we come up another 45 points to hit this resistance. If we start rolling over and back test 52.86 and maybe get some type of move like this, where we come up, we come down, get our higher low structure, then come up. And let's see what happens when we get to this next key level. Again, April 8th is the key pivot I'm looking between now and then. I want to see what this does, guys. This was a euphoric move in the marketplace. And remember, if we get another hot inflation print as well, then you're going to have 4 in a row. You're going to see the market start to get worried. And the 10-year is doing something interesting. It actually started regaining some of its losses. When I looked right before this transmission, I think we were at 429 again. So remember, what are those yields pricing in? Future growth and inflation, right? So you could see yields still move up, which would be really interesting. All part of the stagflation narrative that we have in the marketplace. But let's go ahead and move forward to the E-mini for the NASDAQ. You're having a little bit of difficulty here getting past your previous all-time high. You're going to set a new, looks like set a new record for a close though, although we still have another 4 hours to trade. But let's look at the same projections, guys. So this date that I'm pulling from here is, this is a 5-day chart, but it's your December peak rally coming down, coming down to that big correction that you had on all the indices, okay? So when we look at this, the 1618 is at 19,034. You're at 18,685. That would be my next key level for resistance if we can get up there. That would be harmonic expansion for this leg, right? Let's just measure these legs real quick. I want to see if they're equidistant or not. If we're getting symmetrical moves, this is a 21% move up to that first leg. And this would be, not quite, almost 16.5% to that second leg. So it's just a further confluence factor if you get some equidistant moves here in the market, some symmetrical moves in the market. But you're seeing some struggling in tech, and that could be from rotation. That could just be because a lot of things are seriously overvalued at this point, and people recognize that. Let's go to the 1-day chart, see what we got here. So we look at this on the 1-day chart. Here's your big leg up, right? The big divergent leg up. Want to see if this can sprint up here, 19,034. Let's see if we can get up there at 18,685. Again, bearish divergence across the board here as well. So it's starting to fade a little bit, guys. We'll see what happens because, we can come up to a level on all these indices. We can come up to a level and get a pullback, right? Get a nice Wyckoff range pullback and then start printing again, like your double bottom, your W pattern in the marketplace, and then come up to the target. Could be something like that. So we want to see this. But right now, money managers, media are all euphoric. They don't care about the economy. They don't care about the average person getting screwed. It's all about them making money. And this is how they make their money, getting you to invest money in the Ponzi markets. But you can make money, obviously, trading these markets, guys. But right now, you're stalling out. I want to see what happens here. And if we start drilling down into some smaller time frames, I mean, this move could easily pull back. When you look at it, it can pull back, but it's just drifting higher and higher right now. It's not overbought, so it has some room to go, and I really like that level, that 19,000 level. Again, it'll be another key psychological level. You can get there in a couple big days in the NASDAQ, but you could get some volatility between now and then. Let's look at the baby S&P, the Dow, the E-mini Dow. Target I'm looking at, guys, same methodology, looking at the December peak rally. down to your corrective low in October. And 1618 is at 41,638. You're at 40,288. The next level beneath that, 40,474. We'll see what we do when we get to this level. Could be some key resistance as well. So we'll see what happens here. Remember, this same projection, you already surpassed the 1618 on the S&P, but you only got to the 1272. So this could easily get up to that 1618. All the FOMO in the marketplace, I would not be surprised. Let's look at this again on the indicators. I mean, it's the same thing. It's the same thing every video, guys. Unless these oscillators reset and start really moving up, this is all going to be bearish divergence, this whole rally up. Either way, it's still going to peak, and you're still going to get a severe retracement when it does peak. But, you know, this is just the way the market is now. And for those of you that don't think external catalysts matter, well, then you really don't know what's going on in the marketplace. So many people say things to me like, dude, just focus on the charts. Don't worry about geopolitical events. Don't worry about the Fed. You can just trade the charts. Really? Because if you watched what happened yesterday, this is why you got the rally. This is the trigger, the catalyst in the rally. This market these days, guys, is driven heavily by media influence, heavily by FOMO, heavily by groupthink, heavily by lemmings in the marketplace. And this is what everybody thinks. Risk on, market's moving up. You know, and eventually they're going to top and then they're going to drop, and it's going to be massive when they do, because the targets are going to change. What's going to happen are going to stay the same. What's going to happen with these rallies is the markets are going to give up more than they would have had they retraced, right? This is why even permabulls are saying it'd be really healthy for the market to get a nice strong retracement, you know, 5%, 10%, something in there, reaccumulate, you know, consolidate, and then lunge up to the next level. The higher this thing flies, all of the indices, the higher they fly, the steeper the fall will be when they top, right? So it's all about patience and waiting to make your move. If we look at the Russell, still struggling to break out here. Remember, this is a lot of garbage in the Russell. Here's your previous all-time high over here at 2450 area. You're at 2122. The Russell's doing something a little bit different because you've been in that bear market for so long. You've been in a Wyckoff trading range here in the Russell. You can go ahead and delineate this way, and you can see all of these failed breakouts above 2000, right? So you got breakout failed, breakout failed, breakout failed, broke out. And what's this? Guys in the room know this, Livermore pivot, right? This is your Livermore pivot coming back up. You're trying to break this fractal right here at 2100, which you did, but you're stalling out again. What happens if you fail here? If you fail, you end up making a double top and you'll end up coming back into the range. But I want to see what the Russell does, because it's right. I mean, look at that. It's 2122. It's right at that key level here. It's trying to take out this previous fractal, and you can see the resistance right there is where it's at. And if it breaks out to the upside, let's go ahead and get some measurements of where this could go to the upside, where I would be looking to the upside if this thing continues to rally for another week or so. 2215 is what I'd be looking at on the Russell. You're at 2121. If you're going to long in some smaller time frames, these other indices, I mean, the Russell, in my opinion, is very risky because of what it is, right? It's been suppressed for so long. I know everybody on Wall Street loves the idea of small caps, but to me, very risky. But if you do and it breaks out and works out in your favor, that's awesome. 2215, guys, it would be my target if it can break out and start moving up in this range. If not, it's going to fail, and it will fail eventually and come back into the range. Let's go ahead and look at BTC. BTC, how many people gave you that exact target, guys? 73. 73.5, I said, or the fib 73,765. You look at that, it got beautiful, right? 73,843, right? So within $100 of the fib on a $73,000 asset. Now, this is doing what it should be doing. It fell right back down to the 1618, 64,299. Big sell-off. What was that? 15, 20% move. And now it's back up above it. This is a 3-day chart. Diamond breakout, right? Our long from taking out this fractal, 120% plus up move back in October of 2023. Symmetrical tops here for the equidistance and the gains for the top, 73,765. And so what are we waiting for on Bitcoin? Well, to see how much legs the new bubble rally will have, you have to really look at the beta, guys. The beta is things that are highly volatile tech, which Bitcoin trades with, like the triple leverage QQQ. Okay. And when you look at this on a 3-day chart, I'm waiting for this move. This is your wave move. Okay. You're waiting for that 3-wave move, AKA a double top. There's your move down, looking for the move back up, resistance, and see if you break that resistance and break out to the upside, which means you have to take out that fractal right there at 73,765. Or if you fail, hopefully, if you are going to fail, it's a lower high. It's easier to trade because you can trade it there, put your stop there, and that would be the way to trade that on a down move. But that's a 3-day chart, and this is what Bitcoin is looking to do. If it holds this area, guys, and starts really, putting in its top here, we're going to look at this on a daily, but let's just look at the support level here of where this found its support. We'll take it from this leg breakout here. You fell right to the 50% retracement at 62.2. So again, I want to see what this does. And to the upside, where's that resistance? Let's look at the resistance on the upside. I'll go ahead and pull this down from your fractal peak down to your base. 786 is always my target on Bitcoin, which is 71,048. I mean, just above it. Bitcoin's so volatile. It likes to make 3-wave patterns oftentimes where the second top is higher too, right? Because that just kills everybody with a stop loss. It likes to do that type of move, but I'm really looking at this. If it gets up there in that 71, 72 range, we'll see what happens with Bitcoin. And if it starts to stall out, and then what are the other markets doing? Have they topped yet? Are they continuing to run? All of those biases will come into play when you're trading long or short. And guys, remember, everything I say is my opinion. Only do your own due diligence when trading these markets. This is all education and entertainment. Let's go ahead and look at this on the daily time frame. Daily time frame, clustering candles, not a lot to see here. Let's go down to, let's look at the indicators really quick while we're here. Yeah, you're still in the bullish territory. Momentum came into the negative territory, but you can see your candles came back up. Let's look at this on a 5-hour. 5-hour, you get a little bit more information here. You have a 5-wave pattern, which is nothing more than a head and shoulders pattern that you can see formed here as well. So you want to see if you can hold this range. Where you really are in trouble if you start breaking down is getting below 59,167. Taking out that fractal, you're going to have more downside. What I want to see is this thing pop up though, okay? If it pops up, I want to see if we can get a trade on this because we got a nice trade on Solana, but I want to see if we can get a trade on this here. And right now you're at 66,356. So yeah, 71, 72K, get Bitcoin to come back up to this range would be a nice potential trade. Maybe make us a 3-wave pattern on a smaller time frame, 5-wave pattern, and see if we can get a nice trade in this area. Let's go ahead and move forward on Solana. So the level I've been sharing on YouTube, guys, for I guess the last few videos, the 204 level, which is the combination of your 786 fib here from the all-time high, as well as your 2618. I posted this trade on our Discord, and 6 hours later, after it fell below it, retested the 204 level, and what did it do, right? What did it do? It fell from 204 all the way down, a nice 21% move on that trade, guys. This is why I like crypto. I didn't come to crypto until 2021, but just keep in mind, that was a 21% move, not even talking about adding leverage here. The whole retracement that I was looking for in the S&P is what, 8 to 10%? I got that in Solana in a day on a single trade, a 21% move. 204 remains your key resistance. This is a 3-day chart. So let's go down to, let's say, the 8 hours. See what we have here on the pattern. It looks like you have a double top, a 3-wave pattern forming. But again, if Bitcoin comes up more, you can see Solana come up more. Someone be patient and wait once again. Let's see if 204 holds, or if it comes out, squirts out higher to maybe 231 and give you a disjointed double top. But I'll be looking for this as well. And of course, it could all just break out to the upside and go on a parabolic run. I just don't think that's going to be in the game plan. But we shall see, guys. We shall see. Looking at Ethereum, the 786 held beautifully at 4,013. There's your direct hit. Ethereum waiting on the same thing as I am on Bitcoin. Let's put this on a 3-day chart. Want to see this come back up. This is your first move in a 3-wave pattern. The problem a lot of people have is they don't understand price moves, how price moves in waves, just like Charles Dow realized over 100 years ago, guys. Price moves in waves. So you got your dip down, wait for the pop back up, and then it's just going to be your market view and your technical analysis skills. Do you think you're breaking out to the upside, or do you think you're going to roll back over? And that's how you determine which direction you take your trade. 4,013 remains your key resistance. And just beneath you here, this actual candle, 3,053, is what you don't want to lose and start breaking down further. Let's go international. The DAX, we're going to pull this the same way we did on all of our indices. Let's go ahead and take this move here. Here's your corrective move. So here's your January high. Remember, the European markets take a little bit longer sometimes to do the same move. DAX, I'm looking at 18,641, guys. You're at 18,448. Already getting a doji here on a 3-day candle. Let's look at the daily. So doji on the daily as well, but that's my key resistance here in this fib projection. Same way the US markets are set up with my fibs, 18,641. If we can get there, find resistance, I'll be looking to take a trade there as well. Let's look at Euro Stoxx 50. Euro Stoxx 50, I think we hit our key resistance. Go ahead and do this fib projection. Yeah, the 1618, that was the 4,999 number I gave you. Look at Euro Stoxx 50 didn't even break out, didn't even break its previous all-time high. So this is a congestion zone here. If you trade these European markets, guys, I'd watch this. You have the DAX kind of fizzling a little bit, the French market fizzling a little bit, and you have Euro Stoxx 50 didn't even take out its previous all-time high, even though the American markets jolted up, right? So watch that 5,000 level. You're at 5,009, just above you at 50.70 as well. Here's the Paris market we were talking about. Tried to break out, gave it all back. Let's go ahead and pull this retracement as well. There's our December candle. They had a double breakout here. So let's pull it from here. This December candle down to your October low, 1618, 8221. Looked like you try to want to break above your harmonic expansion target, and nope, got slapped right back down below. So again, watch these European markets. If you are interested in trading them, you can trade them on BingX. You can trade them on SimpleFX, guys. I enjoyed trading this European markets. Got a lot of Europeans on the Discord as well. Just above you, 8324, but you're struggling at the 8221. Good resistance zone here, and on smaller time frames, you may be making some interesting patterns as well. But you just about hit overbought here on the Paris market. The European economy is struggling on paper anyways, more than the US, even though the US economy is a disaster and being propped up by printed money and crazy amounts of spending. But let's go ahead. Actually, I'll drill down. Nobody ever requests the Paris market. I love trading the Paris market. Traded it many times before. But let's look at this on the 3-hour time frame. And you can see 8221, guys. I mean, you got consolidation, accumulation right here, failed breakout. So I'd watch these levels and trade this based off of your market view and what you think is going to happen. But if you start breaking down below 8120, 8140, then you can have a next level down at 8,000. If you start breaking up above 8273, watch 8324. But I think this is some topping action. We'll see what happens here in the European markets. And of course, finishing with Japan, took out its all-time high once again in confluence with the US markets, 40,940. Up massively. My next target, 41,855, guys. What's interesting about this target based on this fib projection as well is if I take this wave target here from this previous wave, June 16th, 2023, and pull this thing down to this leg that it shot up from, look at your two fibs. They line up perfectly on top of each other, 200% expansion. So I think you're going to get to that 41,000 level here for resistance. 41,855, we'll call it 41,9 or 41,850 to 42,000 probably, right? So we'll check that out when it comes up in this area and see if we get some resistance here, because you got some nice Fibonacci confluence for resistance, and you're getting divergence on this rally as well. For now, on the daily time frame, we'll see if you start turning these indicators upwards. All right, guys, I hope everybody has a fantastic weekend. As always, thanks for tuning in and watching. I'll answer your questions, comments in the YouTube comments. Check out our Discord. Love to see you guys there. Be sure to like and subscribe. Take care, everybody.